In this video, I'm going to give you a high-level overview of the income statement. And if we're just meeting, I'm Casey, an accountant at a Fortune 200 company. So let's just jump right in. High level, the income statement shows if the company is making money or losing money. And how would you know this? Get your flashcard ready. It's revenue less expenses equals net income or net loss. Net income means the company made money. Net loss means the company lost money. So get that flashcard ready because we're going to cover the textbook definition of revenues, and then I'll give you a real world example, which makes it so much more exciting. Revenues. Revenue examples could include items such as sales income, service fees, or interest earned. Now expenses. Expenses might include things like rent, salaries, or cost of goods sold, which are the materials used to make the products. So the goal of the company is to increase revenues and decrease expenses so they show a net income. Now, you know I love my real world examples, so let's take a look at Ulta Beauty's income statement. I just downloaded mine from online by searching Ulta Beauty 10K. So if you want to follow along with me, go ahead. I've got an older income statement because I just picked the first one that populated. And let's start at the beginning and work our way down. So as you can see, there's net sales, and sales are things that the company sells. So when you walk into an Ulta Beauty store, you're greeted with cosmetics, makeup brushes, hair products, and if you make your way all the way to the back of the store, sometimes an Ulta has a salon, so they might offer hair dyes and haircuts. And less net sales are cost of sales. And marching down the income statement is selling, general, and administrative expenses, because when you walk inside of Ulta, the company has to pay somebody to stand there and check you out or pay somebody to do your hair. Pre-operating expenses, operating income, which then shows income before taxes. Income tax expense, because Ulta has to pay income taxes. And you can see that Ulta made a profit in this particular income statement, or a net income, meaning that revenue was more than expenses, which is what you typically want to see. And your next question may be, well, who actually uses this information aside from me, the accountant, trying to learn how to prepare an income statement? Well, internal users such as internal management, because they want to make sure that they are on budget for items, meaning they don't want to overly stock their inventory so they wouldn't sell it all. And external users like investors or creditors, because an investor would want to make sure that Ulta was paying a dividend. You know, they're a profitable company. Let's look back at that income statement. You can see net income per common share and weighted average shares outstanding. So you would want to know, you would ask yourself, by looking at the income statement, is Ulta a company that I want to invest in? Because if there was a net loss, the answer is probably no. And external users such as creditors or banks, when lending money, they take a look at the income statement because they don't want to give the company a huge loan if the company's just hemorrhaging money or their expenses are out of control. One of the very first things they will look at is salaries. Like, is there overpaid individuals? Are salaries expenses too high, etc.? And if you want to learn just a little bit more about accounting basics, consider picking up my very short ebook off of Amazon.